The IRS collection process. It starts with a tax bill, whether you file your tax return on your own or the tax agency files the tax return on your behalf. It is best that you file your own tax return because in that manner, you will, in most cases, be able to get yourself all the credits and deductions that you are entitled to. Otherwise, the IRS just takes the total income that is reported by third parties, basically does an audit, and creates a tax bill for you. And in those cases, the bill is not dischargeable in bankruptcy if you decide that bankruptcy is your only option, but you have to seek the advice of a bankruptcy attorney because there are time frames that you are able to file bankruptcy for a potential bankruptcy discharge. The IRS tax collection process. That starts whenever a tax bill is created, whether with an original tax return that you file or one that is filed for you on your behalf because you fail to file an original tax return. Those type of tax returns that are filed by the IRS or by the tax agencies at the state level, they don't qualify for a bankruptcy discharge in the future because they're produced by the tax agencies themselves, and they don't qualify for that type of discharge at the point in time if you file bankruptcy. So basically, the state or federal tax agency can prepare a tax return on your behalf based on all the tax reporting income sources that are reported by third parties, whether it's companies that one worked for as a self-employed individual or when they misclassify someone as an independent contractor. Irrelevant of the type of document, they will take all the income sources and create a tax return for you under what is called a substitute for return. And those type of assessments or tax bills are not dischargeable in bankruptcy if and when you're able to file bankruptcy. There's certain time frames, so I would suggest that you hire or go consult a bankruptcy attorney before you make that decision. Once a tax bill is created, the IRS will mail minimum of 4 notices, and after that fourth notice, you need to make sure that you look at the upper right hand corner of those letters. Open up your letters because there are time frames that are very important in order to avoid certain tax collection actions such as filing of tax liens and or garnishments to your wages, accounts receivable, and other sources. So it's important that you open up the mail. Do not just receive it and put it away somewhere until the next notice is received. Usually, as I said, there are 4 notices that are issued, and then a letter 11. And as mentioned before, look at the upper right hand corner of the letter. See if it's a letter 11, notice of intent to levy, final notice, that gives you 30 days to file an appeal or to make arrangements before they start those enforcement actions, which can include seizure of any assets, shutting down your businesses, taking your properties of any type, including pension plans, 401ks. Yes, they can take your 401k pension plans and other pension plans, depending on the type, and those are not exempt from garnishment. So you want to avoid all that. You want to contact the IRS to make arrangements or hire someone to help you to make a decision as to what your options are. And there are many options. There are over 26 resolution options in the IRS collection manual. In most cases, you will hear of the 5 most common options, which are penalty abatements, hardships, bankruptcy, installment agreements, offers, and compromises. But as we move on, if you don't get a letter 11, you will most likely receive from a local revenue officer once your case is assigned to a local office near your residence or business location. They will come down to your last known address and start trying to communicate with you and try to resolve your case in one of many ways. They will give you a final notice of intent to levy, a letter 1058 if you didn't receive a letter 11 from automated collection system. Those letters will provide you with appeal rights. It is imminent that you comply with giving the revenue officer the documentation and information that they are seeking to determine the best collection potential based on your financial situation. Keep in mind also that they will address cause of delinquency, what caused the debt, current compliance with estimated tax payments or tax withholdings if you're salaried employee or wage earner. So for the current year, you have to be current with your tax withholdings, or they will seek to get you current for the year that we are presently in. And then they will ask you in most cases for financial documentation depending on the type of entity that you're running if you're a business. And in most cases they will also ask you for a personal financial statement with a listing of backup documents. I will go over those type of documents on another YouTube channel, on another video, so that you know the initial contact guidelines and what to expect in those type of interviews, what to provide, what not to provide, and all the suggestions that are available and that I would definitely advise my clients to comply with, or in many cases not provide, because it basically is not required. And you have to think about whether or not it is in your best interest to hire a tax professional, whether it's enrolled agent, CPA, or tax attorney, who can guide you and consult with you on what your options are. And again, each case is different. Each case has its own requirements. And just because a friend tells you that they were able to negotiate or set up some sort of resolution, it doesn't mean that you qualify for that resolution or that that's the best possible resolution for you. Just because you may work in the same location, you may have family, they don't, and your assets may be different, your expenses may be different. So again, each case is different. Seek advice, and if nothing else, go to the free initial consultation that many of these professionals provide to potential clients. And some of them also provide free initial consultation for an hour, and then they charge on a prorated basis. I would urge you to take advantage of that. So once you get those letters, as I said before, you want to make arrangements immediately, because you don't want them garnishing your wages, taking your assets, closing possibly your business. You don't want to wait till the last minute, because there are certain things that a tax professional can do in order to stop those type of actions and get you into the appropriate resolution option for you. As I mentioned before, there are so many options that you can take advantage of. It's not just offers and compromises, installment agreements. It depends on the type of tax that you owe and whether or not you qualify based on meeting the preliminary requirements in order to get into that process or procedure. So once you get those notices, comply with the documentation requested, follow the guidelines that your tax professional provides, give them the necessary paperwork and information. Otherwise, no one can help you. If you don't follow through, and yes, many times it is extensive documentation and information, but keep in mind that these professionals, they don't know your situation, and they are required to provide the backup for your financial situation, for your assets, for that financial statement, as the government agency is trying to determine the best collection avenue for them to close that case, and the best option for you as the taxpayer as well, based on the Taxpayer Bill of Rights and based on the manual sections and the guidelines as established by the requirements of the IRS or state tax agencies. So that's all I can say at this stage as far as the collection process. You can do your own research on Google. Go into Internal Revenue Manual, Part 5. It will give you a table of contents of the IRS processes and procedures, and you will see there all the knowledge, all the requirements that those collection officers have to know and your tax professionals need to know in order to guide you to the best possible solution for your cases. And remember, just because there's a process or procedure available, that doesn't mean that your case will qualify for that one process or procedure. Just because there's first-time penalty abatements, that doesn't mean that you qualify. Just because there's an offer in compromise and you take a number from the top of your head or the cloud and say, okay, IRS, forgive all the penalties and interest, I will only pay you the tax. It doesn't work that way. Again, seek advice. There are only three tax professionals that can represent you before the IRS tax collection, and that is a CPA, enrolled agent, or a tax attorney. Interview several. Ask them for if they offer a free initial consultation and what their rates are for that free initial consultation after the 1 hour or 45 minutes that they provide. I would strongly urge you to see your options, see what they can offer you, and follow up with them once you hire one of these professionals. Follow up with them every so often to see the status and verify the status of your case. Right now, with the COVID-19 delays in not only mail, but a lot of the service centers were closed down. So you have to be patient. You have to be patient in your requests for information or certain process or procedure, because it is taking longer for the IRS and state tax agencies to catch up with all the mail and input or implement their process of inputting information in order to try to help you with the requests that you have submitted, whether it's installment agreements, offers and compromises, or whatever other options. If you need assistance, give me a call at 323-344-2294, or you can call my associate Luz Orozco, enrolled agent, at 310-650-4664. Thank you very much.